Welcome to the Capital Spreads Weekly Update. Today's Thursday, the 19th of August 2010. And the week so far, well, it's been quite a quiet and lacklustre week given the excitement and changing market sentiment we've had over the last few weeks or so. The market seemed to be in a bit of a non-conviction period before deciding which way to go. We had the Bank of England minutes come out yesterday, which showed again the one dissenting voice to raise interest rates. All other members voted to keep interest rates on hold. However, as important was the fact that they also voted to keep quantitative easing on hold as well, to see where the economy is going forward. Obviously, if they decided to go ahead with quantitative easing, that would have had an immediate and strong impact on the value of sterling. The bond markets also seem to have come back very much into focus, with strong demand for bond auctions out of Germany, Ireland, Spain, as well as Portugal. Now, these were countries that were recently concerned over as to whether they could actually maintain and sustain their debts. It looks, at least in the short term, many people seem to have forgotten that fact. So looking at this situation as it currently stands, the FTSE is trading around 53.10. It's up about 6 points on the day. It continues to trade below the 200-day moving average, a level that acts very much as a strong resistance level for the FTSE. It broke above the 200-day moving average back on the 23rd of July and since fell back below that on the 11th of August. In order to show any inclination of going higher, it has to remain above the 200-day moving average and remain there to show that it has strong momentum behind it. However, given the uncertainty that we have in the financial markets at the moment, it certainly looks like the FTSE could continue ranging between 4,800 and 5,400. Cable has also had a strong run-up since the beginning of June, when it's trading back at 144.00 and has most recently bounced off the 160.00 resistance level. However, even where it currently stands around 156.50, this looks very much like a correction rather than a reversal. I have a chart to show you what I mean regarding this. This was a chart that I previously had up in one of my previous postings. However, you can see that it still applies. Where it currently stands around 156.50, sterling dollar is very much in a strong uptrend, and that trend hasn't broken at the moment. Your view on cable very much depends on your view of the UK economy. Now, we continue to have mixed results and mixed figures coming out of the UK economy. For example, we have inflation remaining at a stubbornly high 3%, which is above the Bank of England's 2% target. However, at the same time, we continue to have some negative results for the UK economy, which show that the economy may possibly be slowing down. Again, this all affects the views of the Bank of England members meeting and where they will whether they will raise interest rates or not. Gold is currently trading around 12.34. It too has had a strong run-up like cable since the beginning of July, and has most recently broken through a resistance level around 12.20. Now, I have a chart to show you what I mean regarding this as well. As it can be seen, having broken through the 12.20 and having the run-up has created what is technically called a bullish wedge. And since it's broken through the bullish wedge, it certainly looks like it could possibly go higher from here. The short-term target for gold certainly seems to be around the all-time high of around 12.65, given the momentum behind gold at the moment. Oil is currently trading around 75.50. It's back within its previously well-established $70 to $80 range. This was helped by the fact that most recently we had oil inventory figures come out that showed that oil supplies are at all-time highs. Combine that with the fact that we also have more oil on the markets from non-OPEC countries, and the fact that we have some slowing in the global economy, it has led to a fall-off in oil recently. However, demand from China continues to remain strong, and so there seems to be very much of a bit of a balancing act in oil, and it seems to be smack in the middle of range that it doesn't look like it will be breaking out of any time soon. In terms of the week going forward, we don't have much in terms of figures of the next few days or so that could impact the market substantially. One possible figure to keep an eye out for will be the German GDP figure coming out on the 24th of August, which could certainly focus minds back on the euro again. But other than that, we're looking at a pretty quiet week in terms of figures. In terms of client positions, many of our clients continue to fade many of the markets. So they hold long positions in many of the indices markets, for example, the DAX, the Dow, the S&P, and the FTSE. They also continue to hold long positions in gold and oil. However, these are long-term positions that they've had for a long period of time, many months. Most recently, they've also decided to go long in the dollar-yen, given the fact that dollar-yen has hit a low that it hit back in November 2009 and has bounced a little bit since. Many of these markets have worked out to be quite profitable for them. In terms of the theme of the week, I think the theme of the week would be the fact that we have had a bit of a quiet period in the summer trading months. The well-known trading phrase, I should say, of selling may go away certainly seems to apply at the moment. The uncertainty as well as the relative quiet in the financial markets is making it a lot more difficult to place long-term trades with any conviction, and it certainly makes forecasting a lot more difficult as well. That's